friends, it's Dave. Welcome back for another video. Today I want to talk to you about a space company that I'm frankly kind of embarrassed I haven't really looked into until now. This is one that's operating out of my own backyard. It's one that's actually already profitable, shockingly enough, whereas a lot of the growing space companies I've been looking at recently are still extremely unprofitable. It's also been in the news quite a bit lately. It's secured several very high-profile contract wins, beating out some very big prime contractor companies. Their stock has also performed extremely well lately. Over the last 4-5 months, they're up almost 100%. That's almost a double since the spring. It's also a familiar name, and they do have a deal in place with Rocket Lab, so if you're a Rocket Lab investor, you should know this company as well, although you might be not as familiar with their stock. I am talking, of course, about MDA, the Canadian space company known for making the famous Canadarm, among many other projects. Let's dive in to the company and see if it's a buy. If you're new here, I hope you'll consider subscribing by the end of the video. It's always very much appreciated, and every like and comment definitely helps with the algorithm sharing the video with more people, so thank you guys so much for that. Now let's dive into MDA. For some strange reason, the Canadian company MDA has been flying a little bit under the radar with retail space investors. I'm actually a bit embarrassed that I haven't looked into the company very closely until this point, but I'll have to chalk that up to them not getting very much press compared to rocket companies, and also the fact that they're trading on the Toronto Stock Exchange instead of the NASDAQ. From a big picture point of view, MDA is a leading provider of satellite systems, robotic and space operations, and geointelligence. First off, their satellite systems business. They actually have decades of experience designing, manufacturing, and testing satellites and mission plans. Over 350 missions have integrated their technology, and their headquarters has a 370,000 square foot modern manufacturing and testing facility. They provide data communication capabilities to famous projects such as the International Space Station, Sierra Nevada's Dream Chaser, NASA's planned Lunar Gateway Space Station, and OneWeb satellites. It's worth noting that while they are working with Rocket Lab on the 17 satellite constellation for Globalstar, MDA is actually the prime contractor on that project, which is valued at $327 million. But of that amount, only $147 million will be going to Rocket Lab, while MDA captures the rest of the value. In a much more massive announcement, they recently won the prime contract of the upcoming Telesat Lightspeed Advanced Constellation. This contract is worth a whopping $2.1 billion and is the largest award in MDA's history, which includes the design, manufacture, assembly, and test of 198 satellites, with options for Telesat to purchase up to 100 additional satellites. These two exciting contracts have shown that MDA now has the capability to compete with the more traditional big boys in the space, such as Thales and Airbus, in mass satellite manufacturing. In terms of their robotics and space operations, the most immediately recognizable piece of their hardware, at least to me and my fellow Canadians, sits on the International Space Station right now. That's the Canadarm2, and it is an important part of space station maintenance, moving supplies and astronauts, performing catches by grabbing visiting vehicles and berthing them to the ISS, and much more. While this one robotic arm might seem like a pretty small part of the overall space station, I can tell you that it is definitely a point of pride for me and my fellow Canadians. MDA is also currently working on the Canadarm3, which will operate aboard NASA's Lunar Gateway Space Station, a key part of the Artemis program that will take humans back to the moon. Canadarm3 technology has also been sold to Axiom Space for their planned future commercial space station. In addition to the Canadarm, MDA's Robotics and Operations division is also working on-orbit servicing technologies, spatial awareness including LiDAR, and communications antennas, and more. Finally, in their Geointelligence division, MDA is building out Chorus, a multi-sensor constellation that includes C-band and X-band synthetic aperture radar satellites, with the ability to image during the day or night in all weather conditions. The C-band will provide coverage of broad natural response data for floods, earthquakes, hurricanes, oil spills, etc., and natural resource observations such as forestry, mining, and exploration. With a well-rounded set of space products and services, let's take a look and see if MDA stock is worth considering buying right now. So, starting off with a quick look at MDA's stock chart, we can see that they did go through the same crash that a lot of other space companies did, growing space companies such as Rocket Lab, such as Astra, and all the rest. However, they have come back really strong, like Rocket Lab has as well, while Astra and a few of those others not so much. We can see that they did bottom around $6 per share, I believe, going all the way up to $12 per share. So pretty much a double in a very short period of time, a little, maybe 6 to 8 months. Very impressive stuff, really. It really has me kicking myself that I didn't look into this sooner, but for whatever reason, it really just wasn't on my radar. I don't know, maybe I just get blinded by the rockets, it just draws your eyes. It's so much more exciting. But this company has done extremely well for themselves this year. Quick look at the numbers in 2022 they were putting up. We can see they're nicely rounded between their three different divisions. So satellite systems that we know they're working with Rocket Lab on that one big contract. 40% of their revenues were Geointelligence, which includes observation, completing with the likes of Black Sky, Spire, and some of the others, would be 30%. And robotics and space operations, another 30%. So pretty well rounded between those three different divisions, not overly reliant on any one segment, which I think is pretty good. And I also think this is quite good. Revenue by customer type. Now, government is always nice to have because they're promptly paying their bills, but I think some companies end up in the trap of relying too much on government and having trouble breaking into that commercial segment, which is really where the larger total addressable market does lie. That's one concern I have with Planet Labs right now, is they've been growing their government contracts quite strongly, but I'm a little concerned that the commercial side of things has been lagging a little. So nice to see they have a strong commercial customer base, even outstripping that government customers. 2022 financial highlights, a very, very impressive year for the company financially. When I was looking at these numbers, I was quite shocked that I didn't really know about them before. So their order bookings grew by 50%. Backlog grew by 59%. Revenues grew by 34%. Gross profits, one of the most important metrics, grew by 36%. Gross margin improved by 40 basis points. And, adjusted EBITDA, 26%. Net income, massive 807%. Although you shouldn't look too much into this number because it seems they just barely became profitable in 2021. And the jump, obviously, from almost nothing to something does skew the numbers quite a bit, but still pretty impressive growth, and the same sort of thing with the diluted EPS. So the order backlog, very strong, $1.15 billion for a company of this size, extremely impressive. And just very happy with the revenue growth we're seeing from 2022 to 2021. And the fact that it's already profitable, really icing on the cake for me. Don't get me wrong, I do love Rocket Lab. I love a lot of these space companies. But it's kind of refreshing to see a company already profitable that I'm not calculating what quarter they're going to run out of money, like I'm doing with, almost every space company I look into these days. I'm saying, okay, this quarter, 8 quarters from now, 6 quarters from now, 2 quarters from now, they're going out of business if they're not profitable, if they continue at this rate. Definitely not the case here for MDA. Taking a quick look at their income statement just to try and get a sense of the growth rate. Pretty decent here. Obviously, this is breaking down quarter by quarter. We do have a slight drop from this previous quarter, so I don't know if that was just some sort of cyclical thing or they just had a really strong quarter in Q1, but it doesn't seem to be too much of a concern to me. Also seeing that, again, they do have that operating income and the net income is in the positive. Looks like it was negative about halfway through last year before breaking into the positives. Love to see that. And I do have a suspicion that breaking into the positives is one of the big catalysts why the stock did move so big this year. Just summing up the revenue growth, so from 2020 to 2021, they did grow from just over 400 million. So that's about a 15.7% year-over-year growth. And then the bigger numbers from 2021 to 2022, 34.3% growth. So very solid growth numbers for the company. I would be very satisfied with those numbers. 25% average over these past 2 years. Unfortunately, we don't have more numbers going back more years because they were a private company prior to 2021. Then I just wanted to take a quick look at the balance sheet, see how healthy they're looking. It seems all right here. So obviously we did have a big dip in cash and cash equivalents in 2022 versus 2021. This is an annual basis, by the way, right now, not quarterly. But they did have a big jump in net receivables, so it looks like they're just kind of waiting for payment on a lot of that stuff, and that should boost up the cash on hand a fair bit. And then if you take into account total current assets, we're looking at $378 million, although some of this is inventory and stuff like that that I usually don't count on for cash if it's needed urgently. And yeah, just looking at the stock, the number I wanted to highlight first is the price to earnings ratio sitting at about 25.37. We're going to dive into that a little bit later. Looks like it had a rough day today, but the overall market did as well. So that's nothing that would concern me too much. Market cap is sitting at 1.38 billion. So that's significantly less than Rocket Lab, which last I checked was around $2.8 billion. But, as I said, already profitable as well, with that earnings per share number sitting at 46 cents per share. Now, I wanted to look at a few comparable companies just to get a sense of whether that price to earnings ratio it's currently being assigned is cheap or expensive. So you want to look at other companies doing similar things, meeting a similar profile, and see what kind of price to earnings they command. So these are some bigger companies, but they're also doing satellite manufacturing. We have Airbus. Obviously, they do other things than satellites, but their current PE is 26.75, and they grew from 2021 to 2022 their revenues by about 12%. And then Thales, that's actually the company that MDA just snatched that massive contract from, and Thales was also looking to get the contract with Global Star that Rocket Lab and MDA are collaborating on. So definitely MDA beating out Thales and basically undercutting them on the price. Thales sitting at 25.13. Lockheed Martin, a bit of a different beast, as we know. They are in space, but they're in so much more, sitting at a 15.59 price to earnings ratio. But the thing to pay attention to there is that their revenues actually dropped from 2021 to 2022. So you would expect a much cheaper valuation. People will pay for growth. They don't want to pay for shrinkage, although I don't know if that's the proper term. But yeah, I have a feeling that may have something to do with Lockheed's drop, and they also do pay a dividend, so not reinvesting as much into growth. Maxar, I checked into. Obviously, they were bought and taken private, but they were a very similar kind of company, at least on the satellite manufacturing side. So I was curious what kind of price to earnings ratio they would command. And from what I could find before they did go private, they were sitting around a 38 price to earnings ratio, so much higher than MDA as well as these other three. So MDA, as I said previously, sitting at 25 and just under a quarter, looks cheaper to me than all four of these, especially if you take into account that growth rate in the last year was 30%. Now, if you average the last 2 years, it was 25%, still much stronger than any of these companies. So usually if you have higher growth, you're willing to pay more for that. Now, the other argument for, say, these other companies could be that they're bigger, they're more diversified, they're more secure. So perhaps that's why they are commanding a higher ratio. But, personally, I prefer the growth. You could have gone back to, say, the 80s, the 90s, and make that argument for IBM versus maybe a Microsoft, saying that IBM is, bigger, safer, more diversified. And if you did that, you will not be very happy today. So bigger is not always better when it comes to these companies, at least in my opinion. I did pull up a Morningstar report on the stock just to see what they kind of thought about it, and they have the fair value right now pegged at 13.49, so a little below this 11.5 that we're trading at right now, but not massively undervalued. We can see that they were well undervalued back in early 2022. Unfortunately, we did miss the bus on that one and that double because I did not really pay attention to the company at all at that time. That I feel like that's my bad on that one. But definitely this company is going to stay on my radar for the foreseeable future. I did want to point out, this is from their 2022 annual report. They're forecasting year-over-year growth of approximately 20% for the year 2023. So, that's a little bit less than we've seen combined over the past 2 years, but 20%, still pretty solid growth and definitely still beating out Airbus, Thales, Lockheed Martin. We don't know about Maxar really because they're a private company right now. But I think a 20% growth could potentially justify a higher multiple than a 25 price to earnings if that is something that is sustainable. And then finally, just checking the analysts on tip ranks, we can see that the overall consensus is a moderate buy, so that's a pretty good rating. We have 2 buys and 2 holds. The average price target is around $12.25 though, so that's only 6% upside, although I think that probably has a lot to do with the fact that it's been on such a run over the past 8 months, and then some of these price targets haven't been updated since, say, 10 months ago or 5 months ago. So, definitely sometimes analysts do tend to chase the stock, so it will be interesting to see if they do up those targets the next time they make their updates. The analyst opinion is definitely not the main thing I look at when I'm researching stocks, but I do think it's nice to just check in and see what they are thinking. Because, if they are all rating it a sell, there must be something going on that you're missing. So I have to say that after this first look into MDA Stock, there's definitely a lot to like about it for me. If you want to get exposure to the growing space industry but don't want to have to deal with the high risk and volatility of a space company that is not yet profitable, they seem like one of the best plays in town, along with maybe a Lockheed or something along those lines. But a lot of the other profitable space companies are not pure play space like MDA is. From that perspective, definitely a very interesting company. As a Canadian, it does kind of make me want to invest in one of the most prominent Canadian space companies as well, and definitely one that I'm going to keep researching and going to keep on my radar. On the other hand, it is very difficult to invest in a company that already has doubled. Something about that just psychologically is very difficult for me. So I kept coming back to, in my mind, I wish I had come across this, last year, researching this company. But on the other hand, if I had, then I only have so much money, and last year I was mostly investing in Rocket Lab in the 4s, so either way I think it turned out pretty well for me. I can't really complain having Rocket Lab go from 4.5 to 5 or 6. The other thing to think about is one of the reasons I like Rocket Lab is their vision of full vertical integration, having launch, building out their satellites, eventually operating their own constellation. And MDA has no intention or plans of ever expanding into launch. And frankly, if they did, I think I'd be scared and probably sell my shares, because launch is extremely difficult and a whole nother beast from just manufacturing satellites. So they won't have the launch piece for their own constellation. They do at least have their constellation that they're going to operate in. It's going to sit in the Earth observation space. But really, I think the most exciting thing for them is that satellite manufacturing piece, getting those massive contracts, winning them over Thales, manufacturing this huge Telesat constellation, and working with Rocket Lab on the Global Star constellation as well. So I guess the final question is, am I going to buy them? I haven't decided yet. I definitely will be keeping my eye on them, looking for a dip for sure. If I do buy them, I'm going to have to sell some other companies. So I'm going to have to go through my portfolio, figure out what I would want to sell in the event that I do pull the trigger on this. But definitely a very interesting company for me. A lot of companies I do research in the space industry I just find too risky, and that is not the case with this one at all. Very pleased to see that they are already profitable. Let me know what you think about MDA Space. Were they on your radar before this? Are you going to consider buying? Do you think we've missed out on the bull run and, all the upside is already baked into the stock? Let me know in the comments down below. If you haven't already, I hope you'll consider hitting subscribe. It's very much appreciated if you do, and I hope you have a great weekend. Happy Friday. I'll see you in the next video. Bye for now.